Today, folks, I got a sweet treat for you. Joe Sandoval's in the house.
Thank you, Brad. Thanks for having me.
Dude, I'm excited because you're a CPA. You got a Sandoval Tax CPAs, folks. Everybody's out there starting businesses, or at least hopefully.
Right.
I want to talk about, like I tell people all the time, you should start a business even if you don't have a business.
100%.
You should operate as a business even if you don't have a business.
Yep.
Go form a business or an LLC or something. So I got a lot of questions. It's going to let the bomb squad save some money. If you guys don't follow Joel, he's the CEO of Sandoval Tax CPAs. He was a CPA, struggled, started his own business. Now he's got a whole slew of CPAs saving people a shit ton of money in taxes.
That's right.
And obviously there's a lot of different tricks and insider knowledge that CPAs have. That's why you go get CPAs. But you started a Tax Savers Academy.
I did.
.com, by the way.
Yes.
TaxSaversAcademy.com, folks. This is for people that can't really afford a CPA, which if you ask me, CPAs pay for themselves.
They do.
But for those of you that like can't quite afford them yet, you got an interactive virtual training system to teach people how to basically save a bunch on their own.
Exactly.
And then hopefully those will graduate into being your clients.
100%.
Nice. Did you get COVID yet?
I did actually back in October of last year.
Yeah, I can't taste anything. I think I have. No, I'm just joking. So I want to start out because most of the people listening to this, I call them the bomb squad. They're either entrepreneurial or business owners. You know, obviously, you know, there's some all types in there, but a lot of them are listening to this to figure out how to grow their business, scale their business, what kind of business to get into. And taxes, folks, is an unfortunate fact that everyone has to deal with. And for a long time, I paid way more than I was supposed to. And then I finally got a CPA and they went back and looked and they're like, dude, you overpaid a million ways.
Yeah, man.
And they could have saved me the money that I was trying to avoid paying.
Yep.
You see what I'm saying?
Yep.
How many businesses avoid getting a CPA to save the money and spend more money than they would have had they hired the CPA?
I think that's actually like one of the biggest like hesitations for small business owners, especially when they're starting out, because every dollar counts and they look at a CPA as an expense when really they should be looking at one as a investment. And it's like, hey, if a CPA is going to save me $100,000, you know, what's a $30,000 fee? But, you know, they may not have, you know, $30,000 or whatever it is, especially when they're starting out, which is why we created the Tax Savers Academy for those kind of beginning entrepreneurs.
Yeah, but if they don't have 30,000, how do they have 100 to pay the taxes?
Right. Yeah. That would be more for a bigger business. So obviously, depending on the size of the business, we can normally save clients anywhere at a very minimum, like $10,000. But then bigger businesses, more established, obviously we can save them, you know, in the hundreds of thousands of dollars.
So let's go back. Before you were a CPA, you just a kid, or you been a CPA for a while?
Yeah, no, I mean, if you take it back to actually my high school days, I had no idea what I wanted to be. Actually, when I graduated from high school, my parents are both in the real estate industry. My mom's a escrow officer. My dad's a property manager. So I was like, hey, I'm going to follow in their footsteps and just kind of go in the real estate career. But unfortunately, this was back in 2005, 2007, when there was a big recession. Mm-hmm. So people started losing their homes and foreclosure. And I was like, you know, I was just barely starting out as a young kid. So I was like, this is not really for me. I always had a passion for numbers. And I actually was fortunate enough to meet the CPA that was working at the escrow company I was working at. And she was like, hey, regardless that we're in a recession, like I got a pretty stable and secure job. So I kind of looked into it. I didn't really know what a CPA was or what they did. So I did some research, sounded like it was the right career path for me. So I actually left. Actually, I'm from Watsonville, California, which is like a very, you know, Hispanic, low-income community. So I left that small town to move to Bakersfield, California, where I'm located currently, to go to Cal State Bakersfield to, you know, get my degree in accounting, just kind of go the traditional route. Never wanted to be an entrepreneur. So I got my degree in business, concentration in accounting, graduated top of my class, summa cum laude award. So then I got multiple offers from CPA firms, and then started my career path as a CPA. And I was just basically working, the graveyard shift from 8 a.m. till 2 o'clock in the morning. Pretty much all I was doing tax returns. And it was a great experience, but that's not what I envisioned when I wanted to basically become an accountant. And so I actually started kind of learning about entrepreneurship. The first book I ever read that kind of opened my eyes was Rich Dad, Poor Dad, that talks about small business, how you can leverage people, leverage teams to actually grow. So I just started looking into entrepreneurial stuff, came across your podcast as well. I was like, man, this is the way to go. So actually what ended up happening is I had a six-figure job at the time. And my boss actually made me upset because I had to run an errand actually after work for only 30 minutes. But he got pretty upset that I ran that errand, basically prioritized that errand over his business. So he wrote me like a nasty text message. I showed it to my wife, and I had already started kind of doing taxes for family members on the side. So when basically he wrote that message, I spoke to my wife, and she's like, you know what, you've been thinking about starting a business. Why don't you just quit your job and just go ahead and try it out? So I did that, went from a 6-figure salary to a 0-figure salary literally overnight. So then after that, I remember actually putting a sign outside my office thinking I was going to get a whole bunch of clients. A couple hours later, my wife calls. She says, how many clients have you gotten? I was like, I don't have any clients right now. And it had barely been 2 hours, but she's like, I don't know if this is going to work out. But
after 2 hours?
Yeah. After 2 hours. But what was interesting, Brad, is that surprisingly, like 2 weeks later, after quitting my job, we found out my wife was expecting our firstborn. And she's like, hey, right now I'm supporting the family, and I'm going to give you 9 months to make this work, because I'm not going to go back and, continue working. Like, you're supposed to be the man of the house, providing for the family. So I was like, all right, I only got 9 months to make this work. So I started literally cold calling, just door knocking, doing everything that I could. Nothing that you think a CPA would do, but it literally pushed me to do things that I wouldn't do, that was out of my comfort zone. Fast forward to today, we now built a multi-7-figure firm, CPA firm, and we're growing. So it's been a blessing.
Good for you, man. Do you think it was partially because you took the bull by the horns and went out and was proactive?
Yeah, 100%. Actually, I didn't really know about business in general. I knew like the advantages of being a business owner, like you were saying earlier, like having an LLC, all the tax advantages that they're. But I didn't really know how to like run a business. I didn't know how to price my services. I didn't know how to manage a team. I didn't know how to build a culture. Those are all things that I learned kind of along the way. In the beginning, I just wanted to be my own, my own boss. But now, those are all kind of things that I learned through coaching, investing in mentors, things like that.
Wife happy now?
100%.
Good. Is she working?
She's a stay-at-home mom.
Nice.
Yeah, for the last 5-6 years.
And then she likes that.
She loves it.
Good. You got to keep making that dough.
Yep.
All right. So for people listening, I got a couple questions, because I used to be in these situations. So I want an answer for the people that might currently be in these situations. What about business owners that started a business, made a lot of money, spent a lot of money, didn't really net a lot of money, but they're behind on taxes? They didn't actually get that shit dialed in properly. If you're behind on taxes, what should you do?
I mean, the first thing you should do is schedule basically a consultation with a CPA like myself. And the first thing we'll do is kind of do an analysis of like where you're at. Like, are you organized? Do you at least have a set of books? Like, you made money, but do you know what your profit was?
What if their books are just their bank account?
Then that's not going to work, especially if they made a bunch of money.
So if a lot of money came in and a lot of money went out, but it's all tracked if it's in a bank account, why couldn't you go back and reconcile every entry and every exit?
Well, if they reconcile, then they can actually be used. But
will you reconcile for people?
Oh, yeah, 100%. Yeah, we'll actually do like the books for business owners.
On a monthly basis?
Yeah, on a monthly basis. We'll send them like a P&L, balance sheet, and then we'll go over that every single month. That way they know how their business is doing too. And then we'll kind of analyze their numbers. Like, hey, this is how much you're spending on payroll. This is your payroll to sales ratio.
What percentage of your payroll or of your income should be spent on salaries? And
I think it depends on the industry, 100%. The general rule of thumb, like that I've heard from most kind of coaches and mentors is like you should have basically one employee for every 250,000 in revenue. That doesn't always happen. It also depends on the type of clientele that you're servicing.
Damn, that's lean.
Yeah, that's pretty lean. Yeah.
Yeah, I mean
that's the goal, though.
That means I should only have about 20 employees here.
Yeah, it doesn't always happen, but I think if you work towards that, then you have pretty good margins.
250 a year or a month?
No, 200. So yeah, 250,000 a year.
Oh, okay.
Yeah.
Good. Okay.
Not
good.
a month.
That
Yeah.
makes sense.
Yeah.
I'm always thinking monthly because that's P&Ls when I see monthly.
Gotcha.
All right. So if you're behind on taxes,
Mm-hmm.
get a consultation with a CPA.
Yep, 100%.
And then pay your taxes.
And pay your taxes. And if you can't pay your taxes, there's tax resolution where we can basically negotiate a payment plan with the IRS. And sometimes if you're, depending on your situation, there's times where you don't actually have to pay the balance in full, where if there's a 10-year statute of limitations. So after those 10 years, the rest of the taxes actually can fall off and then you don't end up paying the whole thing.
What does that mean?
So the IRS only has 10 years to
What if they don't collect?
To collect their taxes.
What if they don't collect?
Then it falls off the books and they don't collect their tax.
What if they still send you notices?
Well, that's why they usually put liens on your bank account, on your house, to protect their interest, start garnishing wages.
But what if they don't do any of that? It's been 10 years and they're still sending you better pay these notices.
You can basically hire us and then we'll look at how many years have actually passed, because it's actually from the year you file, not from the day you should have filed. So if you filed late, if you filed late, it's probably not, it hasn't been 10 years yet.
I bet you they get real serious after about a couple years.
Oh, for sure.
Like I've never seen the IRS not start attacking you within a year or two.
Right. It's usually like 2 years in where they start, now starting being pretty aggressive.
I just got a notice that said you owe $4,900 and change from 2017. I'm pretty sure they did that then and I paid it.
Mm-hmm.
How do you know if you really owe that? And where are they coming up with that number?
Yeah, I mean, the easiest thing to do is, like, for us, what we can do is we can file a power of attorney that allows me to basically pull transcripts that shows what income you made, what taxes were due, what you actually paid, and then we can see if that balance is actually correct or not.
Have they ever made mistakes?
They have 100%. I mean, it's usually honest mistakes, obviously, but there's definitely mistakes. Yeah.
But like, what is this, 2022? How 5 years later they're saying, hey, you still owe $4,900 for 2017? I'm like, how's that? I just got that like a month ago.
Really? Yeah. The IRS now.
I just paid it, but I thought in my head, like, where's that? Like, how do I know that that's right?
Right. Yeah. I mean, like our clients, when they get a notice in the mail, the first thing they do, they don't pay it. They'll reach out to me like, hey, Joel, is this accurate? Should I be paying this or not?
What if they go into your bank and just take it?
Well, then that probably means they were entitled to it, but we can still take a look to see if it actually was correct. And if it wasn't, we can get a refund and get it back.
Nice. So CPAs are freaking handy.
For sure.
Now, C is certified, P is public, and A is accountant. What's the difference between that and a bookkeeper?
Oh, it's a huge difference. Well, CPA, first of all, like, you got to pass a rigorous 4-part exam. It's a 16-hour exam. They split it up into 4 parts. The pass rate on it is like 40% of the people who take the exam only pass. The other 60% fail. I have team members that work for me that are still studying and having a hard time. So bookkeeper, obviously, you don't even have to go to college. You can just basically, it just means you can keep track of income and expenses, and hopefully, sometimes not even then, put together a P&L. But we've seen P&Ls that are from bookkeepers that need a lot of work. So
what about these people that just go to H&R Block, type in the numbers that are on their 1099 or their W-2s and hit enter? How accurate are those? Like if I brought to you my W-2s, whatever my income is, I type it into H&R Block, the auto instant shit they do.
Got it.
And I give it to you, would there be a savings?
If you're just like a W-2 employee, not really, because if you enter it into the software or I enter it in, it's going to be the same result. But if you're a business owner, then 100% we can help save you money, because first of all, we don't start like what we do. We don't start every relationship with tax preparation. We start every relationship with a tax plan. So we'll look like, all right, Brad, how many businesses do you have? what's your annual revenue, what's your net profit for each business, what's the entity selection for each business. And then almost every single time you're probably using the wrong entity if you haven't done that analysis. And then just that entity change alone will save business owners. I've seen it save up to $300,000 just because they had the wrong entity. And so we can sometimes change it. Sometimes we can't, and we just have to form it and just kind of bite the bullet, and going forward, they'll be saving money. But sometimes if they have an LLC, we can retroactively change it, and that's where they have huge amount of savings.
So everyone should start an LLC over like a S Corp or a C Corp? I
think the LLC is the way to go because it has the flexibility to be taxed basically in any way, and we can retroactively change it. So if your LLC should be an S Corp, or if your LLC should be a C Corp, we can change it from the day you formed it or the last 3 years, whatever is earlier.
Yeah, because I always start LLCs and then file as an S.
Yes. Well, I don't know if that'd be smart for you, Brad, because the S Corp falls, the income flows to your personal return. But if your personal tax rate is above 21%, then you're overpaying in taxes because the C Corp pays a flat 21%. So you're probably better off that LLC being taxed as a C corporation. And that's where we can analyze.
But then I pay double taxes.
Only if you withdraw from the C corporation. But you might be
living
living
in there forever.
Well, you might be living off your C corporation.
No. Like I said, dude, I just not too long ago got a CPA. And they said, shit, dude, you've been spending way too much. Start using this for this, start doing this, start doing that. They gave me a whole list of things. Like I didn't know I could put gas in my vehicle as a company expense. I just pay for gas myself. Oh yeah.
Oh wow.
Cell phones, all the shit that you could easily but
oh, wow.
what about so everyone should start an LLC?
Yeah,
first?
Start an LLC and then have a separate bank account, obviously. Because some people will start commingling their expenses or use their business and personal account using the same bank, and obviously that makes things really, really messy. So you got to have separate banks first of all, and then
separate banks or bank accounts.
Well, separate bank accounts, but if you I have different banks for business and personal, but you can have the same bank as long as they're different accounts. But having an LLC is great because we can then retroactively change that entity type if you need to be, which we probably should change that.
What if you're right now in some hot water because you didn't pay taxes for a while, and it's like theoretically criminal, isn't it?
It can be. Well, I mean, it's more considered criminal when there's like fraud, and some people.
Well, just not filing is not legal, is it?
Well, if you don't file, what happens is the IRS will actually file for you. So they'll file a tax return for you, and then they just basically will include all the income, and they won't report any expenses. So then you end up overpaying. And what we've seen is because the business owners aren't tracking their expenses, they're like, hey, I'm just going to pay the taxes on just my income. When you could have wrote off, like you said, your cell phone, your gas. I mean, these are just like generic expenses. That's not even any advanced tax plan. These are just kind of like tax 101.
Damn. Is this what your VT teaches?
Yeah.
So like if someone were listening to this and they went and wanted just to learn the basics, is that in tax?
Yeah, and I also show them how to use QuickBooks. So like step by step, like if that way you actually have a set of books. I know, like you said, the bank account, yes, all the transactions are in there, but have you categorized everything? Or have you actually put it under gas, under meals? And it can actually create a profit and loss. Like I'll show you step by step in that VT how to do that, and then all the tax benefits as well of being LLC, S Corp, C Corp, and then just the generic expenses like cell phone, automobile, all the travel expenses. If you go out and go on a vacation, there are times where you can make that deductible if you plan it correctly. I'll go and teach you how to make it deductible and do it properly so it's deductible.
Or like, let's say I want to go on vacation, but I can also invite a client with me.
Right.
Now that could be a complete write-off.
Yeah, I mean, if there has to be a purpose for that travel, you can't
What do you mean? I'm going to try to close a deal.
Well, then there you go.
I'm bringing them to Cancun to see if we can do business. Unfortunately, we couldn't. We just drank too much, had fun, came home. I didn't close a deal, but it's still an expense, isn't it?
Yep. There has to be a valid business reason for that trip, and
who judges?
The IRS, and if the IRS, but again, there's like 3 levels to the IRS. So let's say the IRS agent says, I don't buy your story, Brad. I'm going to say it's a personal expense. Well, you can take it to appeals, and then in appeals, you can tell your story again, and then the appeals might say, I believe you, Brad. Let's make it deductible. But if you lose in appeals, then you can take it to the federal court. And then if you lose at the federal court, then you lost.
And you bring a CPA with you the whole time?
You should, from day one.
Yeah. Yeah, folks, I'm telling you, man, if you don't already have a CPA, I'd strongly advise you consider one, even if it costs money, because my CPA that I hired saved me way more than I paid.
Yep.
And again, I mean, to not have a CPA, it would be like representing yourself in a criminal case in court. Like, get a lawyer.
Right.
So you would definitely want to get a CPA. What about 3 tips that someone could do just by themselves to lower taxes?
Well, for one, I think that purchase the VT Tax Service Academy, because it'll show you exactly step by step what you should do to basically write everything off. Like, you can make that's what I was saying. Like, you could live out of your C corporation if you plan it correctly. Like you just talked about the vacation example. That was probably a personal expense, but you made it business. So you can actually live out of your C corporation. And there's a rule
that they don't catch on to that shit.
Well, I mean, that's why you say you got to have good documentation. Like, you got to have that story solid to say, maybe I did close the sale because of that trip. If you actually, got drunk, but you still closed the deal, then it's a valid business expense. Like, I wouldn't have closed.
But what if I brought my whole family? They didn't need to be there.
Yeah, that might be a little bit. You have to have a reason for them to travel. Like, oh, well, they're friends with, our clients. We all get together. I mean, again, it has to be for business 100%. There has to be a reason for it. And if you do it right, then you can technically live out of your C corporation, and then whatever's left over, you just pay taxes on it. Now,
don't CPAs sign the tax returns for you?
They do.
So that means if you're aggressive and you bullshit, or let's say get in the gray area, and there's anything wrong, is the taxpayer liable in any way?
The taxpayer is still 100% liable. The only thing the CPA is liable is for any interest or penalties that would be assessed.
So if you lie on my taxes, I'm still liable?
Well, you actually have to sign it as well.
I know, but how the fuck do I know? That's why I hired you.
Well, I think what we do is, like, if we do your books, if anything looks like kind of suspicious or like it might be in the gray, like, we'll make a phone call to it. Like, we would call you, Brad, or send you like a spreadsheet and like, hey, Brad, we saw you went to Cancun. Like, what was the reason for that travel? Was it actually for business, or was it like, did you just go on vacation? And we'll have that conversation, and then based on our conversation, we'll make that determination on, yeah, I agree. Based on what you said, I'm going to classify it as a business expense.
Yeah. There's something unfair about the whole tax thing.
Right.
Like they say, you got to do your taxes to tell you what we owe you, but yet they know what you owe them. Why don't they just tell us? Like, I had to do my taxes. They're saying, you owe me $5,000 more. Well, motherfucker, why didn't you just tell me how much I owed you in the first place?
Did you ever find out why?
No, I just paid it. It's $5,000. But at the end of the day, I'm pretty sure. Well, I know for a fact in 17 when I filed, here's what you owe. I pay it because I pay it in full.
Right.
Why did they say I owe you $5,000? Did I miss something? Like, it was.
Yeah, I mean, that may be an immaterial balance for you. Then you just pay it. But like, for us,
but did I miss a penalty? Like, where do they come up with that number? How do they know?
Yeah, the only way you're gonna find out is to send that notice to whoever prepared your return that year, because they can basically compare. There's a transcript that says this is what you prepared on your return, and this was our analysis, and here's the difference.
Well, the IRS's analysis is going off what, 1099s and shit that was submitted to them,
right?
Or like gambling winnings you forgot to post, they would have, and they'd go, oh, no, you won a royal flush. Because sometimes you win a royal flush and you forget.
Right. I don't know how you forget that, but
well, because like, when did it happen? Like, when was that? Was that January or was that December?
Oh, that's true. Yeah,
because all they do is they pay you, and then they give you this little form.
Yeah,
and then it's like, sometimes I'll look at that form and I'll be like, shit, did I freaking include that? And then what about gambling losses? Can I go around and pick up all these tickets at the sports book and say, those were my losses?
Yeah, I mean, you can, if you have gambling winnings, you can offset those winnings with losses.
How do they know if they're your losses?
Well, usually the casino, like if you get one of those game cards, they'll keep track of all your losses. So you can print out like a win-loss report that shows how much you lost. That's usually what our clients do, and then we'll just offset whatever they won.
So if I lost 100,000 but won 40, I lost 60 net, no taxes on the 40.
So yeah, no taxes on the 40, but you can't use an additional $60,000 in losses to offset. You can't have more losses than winnings, so it can only net out to zero.
Gotcha. All right, so let's go back to the 3 tips. Tip number 1, go to taxsaversacademy.com and learn something.
Yep.
You should be able to lower taxes. Tip 2.
Tip 2 is like just schedule a call either with, our firm or any CPA, and like, because really you should be doing an entity analysis every year. Like I was telling you, Brad, like you do LLCs and you elect them as an S corp. I mean, based on your income, that's probably not the best entity selection for you. Like if you were to change into a C corp, how much money would that save you?
Well, I had a C corp once. They told me to change it to
an S.
Yeah.
I would only recommend that if you're below the 21% bracket. Now, the tax bracket could change with the new basically president. They're trying to change it to 28%, but they haven't changed it yet, so it's still 21.
When is it going to change?
We don't know yet.
Is it going to go up?
They're going to try to change the C corp. Yeah, they're trying to change it up to 28%, but
it's still better.
Yeah, I mean, I think if you're making good money, the C corp is the way to go.
Well, I mean, the way things get structured are you personally shouldn't make much money. You just control a shitload of it.
Right.
So like, do you do some of that tax planning?
Yeah, 100%. Like,
because shouldn't you have a trust or two?
Oh yeah, for sure. I mean, even for just legal reasons, like to have, once you acquire assets, you got to make sure that your heirs are taken care of. That way they're not fighting over your.
But do you do that, or is that a financial advisor?
That's usually done by a trust attorney. Yeah, it's not even done by a financial advisor now.
Now, a lot of these small businesses that are building up revenue and they're making good profits, let's say $1 million a year in profit. Mm-hmm. If they're already using a CPA and that CPA said, "Hey, there you go, there's your taxes," how many CPAs miss shit?
Oh, I mean, 100%. But I think that like CPAs, what most CPAs do is they just prepare your tax return based on your books. So really, whoever's doing your books is probably more important than your CPA, which is why we actually do the bookkeeping as well, because then we can say, "Hey, Brad, what was that expense for?" Right? That's going to determine your tax liability. But if you have someone else, let's say internally you have someone here at Lightspeed that does your books, and then you give it to your CPA, well, I'm not going to go audit your books and see, what was the reason for that travel. I'm just going to use whatever your P&L to prepare the return.
Well, that's not worth it.
No, it's not.
Yeah, I'm looking for a CPA that will say like, "Hey, dude, you're spending money on gas for your vehicle. You could actually write that off," and I didn't know that.
Yep. The only way to know is by having your actual CPA have someone on their team do the books. Because then they'll see like, "Hey, where's your gas expenses? Like, or where's your cell phone expenses?"
What's that cost?
I mean,
roughly?
we start at very minimum $500 a month. That's for like, small businesses, but we can go up to like as high as $10,000 a month.
Well, how do you know what people spent? You got access to all their banks and credit cards and everything?
Well, when we meet with clients, we actually ask them like, what's your annual revenue? What's your annual expenses? And if you don't know, then just give us an idea to see the size of your business. Like how many employees do you have? Like we go through a whole list of questions to get an idea of like how many businesses you have. And that'll give us an idea of like how to price you based on the amount of activity you're going to be having.
Yeah. Tell me about holding companies.
Holding companies, oh man, it's the way to go if you're investing in, especially in like real estate or in other businesses where you're not going to be actively participating. Just to give you an example, let's say you're going to purchase a building, or let's say this one that you just bought here, Brad. If you decide to buy this building, I'm not sure if you own it or not, but you would want to buy it under a holding company, because then your holding company would be able to depreciate the asset, the building, over its useful life. And then you get to rent out, the holding company can rent it out to your operating company.
But how do I save my personal taxes on that?
So the way you would save is basically when you depreciate that building. So let's say it cost you $1 million. The building did. Well, there's a strategy called cost segregation where you say, you know what, engineers come out to your building. They say, okay, well, you got, a TV here that's probably only has a life of 5 years, got the roofs, maybe 15 years. If you don't do that cost segregation study, it's normally going to be depreciated over 39 years, a commercial building. Well, I can accelerate it and depreciate the entire thing, like the most of it, all in 1 year, because if it has a life of 15 years or less, there's a rule called 100% bonus depreciation where I can write off the entire, all those assets that are under 15 years. So you might have 800,000 of that $1 million that you can write off this year. So if you had a really good year, you just wrote off $800,000.
Now, personally, I thought the tax would go to the holding company, or the depreciation benefit would go to the holding company.
It would.
So then how does that apply to my personal taxes?
Well, again, it depends on the entity election, because if that LLC is taxed, let's say, as a partnership, well, then it flows to your personal return, right? If it's taxed as an S corp, it flows to your personal return. The only one that doesn't flow to your personal return is a C corporation.
So if I'm filing as an S, I say I lost $800,000, that goes against my personal.
Correct.
As a credit.
As a deduction.
Is that how Trump didn't pay taxes for so long?
I mean, I haven't reviewed his returns, but yeah, I mean, he's in the real estate business, and that has huge advantages.
So real estate is really the best tax vehicle there is?
It's one of the best, yeah.
Is there any other ones?
Gosh. Well, just being in business in general, like you were saying, right? Having an LLC, like now I get to write everything that, all my personal expenses, I can make them business. So that's probably the next.
And if you never get audited, no one will ever know?
Right.
How often do people get audited?
It's a very rare when someone gets audited. It's usually about, I think we saw in the statistics, like 1% to 2% of people get audited, but that might change with the new, presidency, because they're trying to add $10 billion in funding to the IRS. So if that happens, there'd obviously be more IRS revenue agents. But that hasn't
backed up right now?
Oh, 100%.
So if you're getting, like, what's the advantage with being backed up?
Well, I mean, they don't have enough people to audit. So unless you're doing something like way out of the ordinary, you're probably going to get away with it. Doesn't mean you should.
Are there any red flags that set the IRS off?
Yeah, I mean, it's very computer based. So they'll look at your industry, like what are your expenses compared to most people in your industry. They'll also look at your return versus the prior year. Like their computers basically do those analysis, and if something pops out, like, hey, doesn't look normal, then it might throw a red flag and alert an IRS agent.
The PPP money that was all forgiven.
Yep.
Now there are people saying there's additional money that you can get. It's not PPP, but if you qualify, you can get, X amount of dollars back.
Yep.
Are you familiar with that?
Yeah, the employee retention credit.
Yeah, ERC.
Yeah, the ERC. Yeah, so basically, if your business was partially shut down because of the pandemic, or you had a decrease in revenue, I think it's 20% in one quarter compared to the previous quarter in the prior year, then you get to qualify for the ERC, which can be up to as much as $28,000 per employee that doesn't have to be paid back.
So if I have 10 employees and I qualify, I can get $280,000 back.
Up to that amount, yeah. It'll depend on different factors, but
do you find a CPA for that?
Most CPAs don't do employee retention credits. They partner, because it's a payroll deduction, they usually partner up with the payroll provider to apply for that credit. But your CPA can give you that introduction.
Yeah. Interesting.
Yeah.
I tried to get it. They said we don't qualify.
Really?
Yeah, because we didn't lose money.
Were you shut down at all?
Yeah, I mean, the production was shut down because no one could come in. But at the end of the day, I didn't lose money.
Yeah.
Because we have recurring revenue with licenses. Mm-hmm. So it's like our money kept growing, even though, because when the COVID hit, everyone started training online. Mm-hmm. So our clients made more money, which means we made more money. So even though, the production department lost, a lot.
Right.
Collectively, we didn't.
Right.
But again, I mean, I'm not an expert, so I just said whatever. I heard you had to lose money. Well, we didn't lose money.
Yeah, you probably may qualify still because it's either one or the other. You lost money or you were partially shut down.
So if you were partially shut down, you qualify?
Yeah, you could qualify.
Shit, I was partially shut down.
There we go.
Technically, I shut the whole damn office down.
Yeah, so you should be
But
entitled
we worked
to some
from
money.
home. So
Yeah.
were we shut down?
Well, it's tough to say.
Yeah, but when it comes to the IRS, I don't mess with them.
Right.
My advice to people is pay your taxes. Don't fuck with the IRS.
Yep.
You know, take advantage of every loophole and every law because the lawmakers and the rich folks that put those there
Right.
was for them to do it, and it's legal. But usually you need a CPA to tell you what those are.
Right.
So, but I would err on the side of caution, meaning I would rather overpay than get in the gray area. I don't want any bullshit. Like, can you imagine going to jail for frickin' trying to beat $100,000 in taxes? Like, just pay the damn taxes. Freedom's worth more than anything.
Yeah.
My goal in life is to be the highest taxpayer in the United States.
It's a good goal to have.
Fuck yeah, that means you're making a shit ton of dough.
Right.
Everyone always says, what? Well, obviously, if you're paying the most taxes, it means you're making the most money.
Right.
Or should be.
Right.
They're like, no, the people that make the most money don't pay any taxes. That's not true. Like Elon Musk, when they were bitching at him, he paid billions in taxes.
Right.
You know, they say Donald Trump didn't pay any taxes. His entities paid taxes.
Right.
He took the tax credit probably as some personal benefit. But is there any truth to rich people don't pay taxes?
There is, because like the example I gave you earlier with cost segregation. Well, let's say your building cost $1 million, but you had, $800,000 that you were able to write off. Well, let's say you made in profits 500,000, so you have a loss of 300. Well,
but not truly. You will have a loss.
Yeah, on paper. Yeah, on paper you have a $300,000 loss. Well, you get to carry over that loss to future years. So then if you make another 500,000, and then you can use that $300,000 loss, but maybe you buy another building. Well, now you're at a loss again, and you just keep having these paper losses year after year. And now you're just not paying any taxes.
Now, do you teach people that?
100%.
Yeah, because that's why I'd reach out to you right there. Like, let's learn that. How do I get away legally with deferring taxes?
Right.
Because there's avoidance, legal. There's deferral, legal. And then there's evasion, not legal.
Right.
And some of them, sometimes, I don't know how they're classified because it sounds like the same thing. Tax avoidance is legal and tax evasion is not.
Right.
Well, what's avoidance? Getting someone like you to tell you how to do it legally.
Right.
Now, what if they go to flat tax in the United States? What if somehow, some way, dude, it's flat tax? They don't need no more CPAs. Why? Because it's very simple. Everybody pays X amount for every dollar they got.
Right.
No credits, no bullshit, just flat tax. What would you do?
That's a great question. I think that if that happened, there'd be a lot of chaos. So I don't see that happening. But
why would there be chaos? I think it'd be preferential.
Yeah.
Like if I could vote for a flat tax.
Right.
I get credits because I got 12 kids, this, that, and the other thing. I own 17 homes, all that bullshit depreciation.
Right.
Like, dude, there's rich people getting richer because they're not paying taxes. And then there's the average folks paying taxes and they can't get out of a rat race. Well, if they just went flat tax, where it doesn't matter who you are, what you do, how many kids you got, how many buildings you own, calculate everything you made and give us X percent of it. Well, I wouldn't need a CPA anymore.
At least maybe for your books, because it's going to be probably taxed on your net profit, right? The flat percentage. So we would still be doing the accounting for you and say, hey, is that travel expense deductible? You might not need me for
now.
the
Why are you
preparation.
asking me if you're the CPA? See, this is what I don't get about.
Well,
I sign the tax returns too, dude. If I pay you to do my taxes, I shouldn't be responsible. You should.
Yeah, well, that's why clients should also be asking is like, not is this deductible, but how can I make this deductible? Right? If you learn how to make it deductible, well, now that's a better question to ask your CPA as opposed to, is this deductible? I
had a buddy of mine a while back, I think 10 years ago. His CPA went to jail for tax evasion.
Yeah, it can happen if you're doing shady stuff.
But he was doing his taxes. So what if the CPA gets shady on your shit just to be cool?
Yeah, I mean,
Dude,
we've
I
had
freaking saved you, $200,000 on taxes this year. What do you think? And then you're like, yeah, hell yeah, man, cool. And next thing you know, 4 years later, they're like, dude, that was illegal, what that guy did. Well, how am I supposed to know what it is you did? I'm not a CPA. That's why I hired a CPA.
right.
How am I supposed to sign those taxes to say, yes, these are accurate? How do I know if they're accurate?
Well, I mean, a CPA they have to have a code of ethics. If not, they'll lose their license. First
Yeah,
of
but
all,
do I got to get a CPA to check my CPA?
no, you don't. But I mean, if it, like we had that actually happen, it wasn't with the CPA. It was like with the bookkeeper who was doing the taxes. Well, she was like adding, I don't know, like kids and stuff like that to people's returns to get them huge refunds. And then the IRS basically started auditing all of her clients because they were all getting these huge deductions. So then they ended up, she's our client. We're having to fix her return because she shouldn't have taken all these deductions. And we're like, now she has to pay her fair share.
But she didn't get in criminal trouble.
No, she didn't.
Yeah, that's what I mean. Whoever did it was responsible.
Right.
That's why when CPA signed the taxes, I think that's CPA should be saying, I'm telling you this is correct.
Yeah, and actually, CPAs will send you an engagement letter saying like, "Hey, we're not going to audit your books. We're going to rely on your accounting to prepare the return."
What if you are doing the books?
Yeah, if we're doing the books, then obviously we're going to take responsibility. But that's
the best possible scenario is you get the CPA to do your books
right.
and do your taxes. That way they're intimate with all of it.
Right.
And they're 100% responsible.
Yep.
Would they then be responsible?
They would still be responsible for the taxes, but any interest or penalties we would be. But again, we're not going to deduct something if we don't think it should be deductible. Like anything that looks questionable, we're going to call you or schedule, a phone call conversation to go over those expenses.
What about gifts for clients?
So gifts can only be deductible up to a $25 limit.
Is that right?
Yeah, only $25 limit which is crazy.
So if I spent $5,000 on a high-end client, I can't write that off as a business expense?
It depends on what you like. If you're going to have an event and, customer appreciation party or something.
No, like you're a client of mine.
Right.
Let's say Tax Savers Academy goes nuts.
Mm-hmm.
Everybody gets it. And you're making millions of dollars, which means I make good money.
Right.
And at the end of the year, I'm like, dude, I love this Joel dude. I'm going to get him a Rolex. I would think that's a business expense. Lightspeed wants to basically give you a Rolex because you're making great business with us.
Right.
That's not a business
Technically,
expense?
It's not. No, technically it's not. Yeah.
That sucks.
Yeah, it does.
What about dining out?
Yeah, dining out, as long as you're with a employee or a customer, then it's deductible. But you
100%?
100% now. Yeah. It used to be 50%.
Yeah. And then before that, it was 100% because didn't it change?
Yeah, it's changed several times throughout the years.
So if I took you out to a $10,000 dinner where we enjoyed some wonderful wine and steaks and cigars and the whole 9 yards, that's legal to write off. But if I gave you a Rolex to say thanks, that's not?
That's not, yeah.
and then even if it was, would you now owe taxes on that Rolex because of the value?
Yeah, technically.
See, this is what I'm talking about. Like, this is dumb, dude. Why so many rules?
Right.
This is ridiculous. And here's another thing that pisses me off. Let's say I make $1 million. I pay taxes. I net 600. That money's been taxed. Now I say, here, Joel, you can have that money.
Mm-hmm.
Now you got to pay taxes because I gave it to you.
Well,
so it was already taxed.
Well, it depends because when you gift money, you have to file a gift tax return. If you gift more than $15,000 to an individual, you have to file a gift tax return. But if you're married, it's up to 11 million, a little bit over 11 million that you can gift to someone without paying taxes.
11 million?
Correct. Yeah, but that also includes your real estate properties. Like,
so if I just decided to give you the $600,000 I made,
mm-hmm.
and I filed a gift, said I gave him $600,000, right. They wouldn't expect any from you?
No.
Oh, I didn't know that.
Yeah, just the donor, it reduces your $11 million exemption. So it keeps going down until you die. We'll see how much you have left.
Oh, so 11 million lifetime?
Lifetime.
Ah.
Yeah.
I wonder who makes up all these rules, because I'm sure they've seen everything trying to get around it.
Yep.
That's why I say don't get around it. Just pay your damn taxes.
Right.
There's so many don't pay your tax scams out there. You know, hey, you don't legally need to pay taxes. You ever heard those?
Right.
You know, and sure enough, all those people always end up in prison.
Right.
For not paying their taxes. And then you spend $50,000 to learn how to save on your taxes. And by the time it's all said and done, it wasn't even worth it. Why not just pay your taxes?
Right.
So I'm one of those pay your taxes kind of guys. Like, I think it's very important that you hire CPAs, you know, take advantage of everything you can, be smart, but just pay your fucking taxes. Quit looking for all the gray area loopholes.
Yeah, 100%. I mean, at the end of the day, you know, we all have that civil duty of paying our taxes. And if you can't really afford it, then we have the tax resolution.
What do you mean you can't afford it? You got the money or you would know them.
Well, it's, you know, it's surprise. You'd be surprised, Brad. Like most people end up spending their money on things they shouldn't.
They spend the tax money.
Yeah, they spend their tax money. They don't put it away like they should in a savings account or somewhere else. So now when they don't have the money to pay their taxes. Like that happens pretty often.
Oh, that happens a lot, I bet.
Yep.
Like if I earned $1,000 here at Lightspeed and I needed to pay this person to get next month going, I would use that money even though $210 was not mine to use.
Correct.
But then again, I think that's the way it should be. Like if I make $30 million and I spend $30 million and I made zero, that should be the deal.
Yeah, but the thing is, like, you probably spent that 30,000. Let's say you made 30, but then you spent the other 30 the following year. We're talking about December, January. Well, you made 30 in 2021, even though now you have a $30,000 loss, you're going to owe taxes in 2021.
Yeah. What about, let's say you do a pre-order of a product and you started in October. So you received $1 million in revenue in 2022, but you didn't pay for the product because it was a pre-order until 2023. So when you file for 2022, they saw the $1 million come in, but they didn't see any expenses go out.
Right.
You would owe taxes on that $1 million.
Right. Yeah. Inventory is not deductible.
Well, there isn't any. It's a pre-order, meaning right now I just tell everybody I'm dropping bombs, hey, I'm gonna come out with my own watch. You can pre-order it for $1,000. 1,000 people send in $1,000. I got $1 million in revenue.
Got it.
Now the watch cost me $999 to make, but I'm not going to start making them until 2023.
Right.
So 2023, I'm going to spend $999,000, but in 2022, I received the $1 million.
Right.
At the end, when I file 2022, how do I say, hey, there's expenses attached to that $1 million, so I don't owe really taxes?
Yeah, I mean, the only way to get around that is to basically change your method of accounting. Like most tax returns are done on the cash basis, meaning that you don't pay taxes until you actually receive the money or until you actually pay for the expense. But if you change your method of accounting to accrual, well, now you can actually pay taxes on expenses that you're going to incur. And also same thing with revenue. Like if you invoice the client but you haven't received the payment, well, on the accrual basis, that would be considered taxable because you've already invoiced those customers and you're expecting payment. So you might change your method of accounting in that example.
Can you flip-flop?
You can, but it can get a little bit, you have to basically disclose to the IRS that you're changing your method of accounting.
See, this is why you just get a CPA and let them handle it. It's too fucking confusing.
Right.
That's why finally we did. But we were like a, 10-year-old startup. For 10 years, like we made money, but we spent it all.
Gotcha.
And that's why I was asking about the entries. Cause like for the first couple years, we didn't really have QuickBooks or anything.
Wow.
We just, money came in, we deposited in the bank and then we spent money, but everything was tracked in the bank account.
Okay.
So after, a while we had to get all caught up. They charged me a shitload to go line by line and get everything reconciled. Like, what was this? What was this? What was this? What was this?
Got it.
Now, obviously 20 years later, we're in order.
Yeah.
Matter of fact, we got audited 3-4 years ago where the IRS came in here and sat for like 3 months, went through every receipt, every ledger, everything we had for 3 months. And there wasn't a penny out of place.
Wow.
Is that rare that they audit you and don't find anything?
Yeah, it's rare. I mean, most of the time, if they audit you, is because their IRS is understaffed. It's because there was a red flag usually. So they usually will find something.
Yeah,
Every audit.
They left here. We didn't know nothing.
That's awesome.
Yeah. Well, I was, because I always bitched about our bookkeepers. We didn't have, I'd just hire a bookkeeper from another company and they have experience with that shit. And then, again, we've been in business 20 years. I'm talking about a long time ago.
Okay.
But we got it all cleaned up. I'd bitch about the bookkeepers now and again. But after that, I thought, well, shit, we're doing something right.
Right. Yeah. And you probably want even just, I don't know how you went so many years without waiting until the end of the year to do your books.
Because that's what entrepreneurs do, bro.
But
we're not worried about that shit, which is why I was glad you're on. People in this audience need to understand, dude. Don't push it off. Like, take it seriously from day one. If I could go back, it would have saved me a bunch of headache and brain damage. Like, go get QuickBooks if you have to. Go learn at Tax Savers Academy how to operate the QuickBooks from even a basic level.
Right.
Start right now. Receipts. I used to buy something and lose the receipt. It gets crumpled up. Someone would say, hey, where's the receipt on that? That worked for me. Mm-hmm. And I'd be like, I'll get it to you. I never got it to them. And, it's like now you can take a picture of the receipt.
Right.
So that now there's no excuse. But back then, dude, we were running and gunning, man. We didn't know all the rules and the bullshit.
But I think even before I started my own accounting firm, I worked for big businesses and I'd sit down with the owners and review their profit and loss statements, their balance sheets, not even just for tax reasons, but just for business reasons, entrepreneur reasons. Like, where's my money going? Like, how much did I profit this month? How much can I reinvest into, other businesses? I think from a business standpoint of view, it makes sense as well.
When do you get to the point where where you call up a client and you say, hey, look, dude, you're going to get taxed on $7 million in revenue. You should go buy a jet or a building.
Right. It's all depending.
And it makes financial sense to do so. So like either you're going to pay a bunch to the IRS or you can go own a building and not pay a bunch. Like, that's the type of shit I'm talking about.
Yeah, 100%.
What would you call that? Tax consulting?
Yeah, basically tax planning. Because we'll get basically what if scenarios. Like, if you purchase this jet, now your cash flow is going to be, you're going to have this probably monthly payment for that jet. And if you were to pay the IRS, this would be, these would be your IRS balance on each situation. So then you get to decide, okay, do I want to buy a jet or do I not? And then we'll just go through different scenarios like that. We'll do it with vehicles,
Is there ever a time where it makes perfect sense? Because like a lot of people, they'll jump over a dollar to pick up a penny. So like, hey, you're going to pay the IRS $100,000 this year. If you go spend the 150 over there, you won't owe them anything. Yeah, but you still spent 150.
Right.
If you'd have just paid your taxes, you'd still net out 65.
Right.
So you'd be 65 grand up in that scenario, but you did pay taxes. Over there, you'd be 90 grand down.
Right. Yeah, that definitely, you got to consider the cash expense. You don't want to spend $1 or you don't want to spend $3 to save $1. You want to spend $1 to save $3.
Does that happen a lot?
People will do it the opposite. They'll spend $3 to save $1, but that can make sense if you needed that jet anyway. So it's like, hey, but if you're just buying a jet for tax purposes, that's not a good idea. Okay.
And last thing, what do people need to know about this year's taxes that's going to change? So they better pay attention.
This year is actually, there's not going to be a whole lot of changes in 2022 that we're doing for 2021 because the presidency couldn't come up with new changes.
Good.
So those
it's still
changes
the Trump tax plan.
Yeah.
Oh, good.
Yeah. Same laws.
But what laws are coming up? Like, what's going to change? 21 to 28. What else?
Yeah, 21 to 28. Itemized deductions. So for people that live in high income states like California, where I'm at, right now there's a $10,000 cap of how many state and local income taxes you can deduct. Well, you're going to pay more than that in the state of California or like state of New York, for example. Well, they're going to potentially increase that to 80,000. So that might be actually in our favor. As opposed to like increasing the tax rate for C Corp. So there's some benefits, but if for entrepreneurs that are making more than 400,000, they're trying to basically kind of penalize them a little bit more by having them pay a little bit more in tax.
How do you feel about that?
I mean, like you said earlier, we got to pay our fair share. But again, that's why CPAs, you need one, because we can help save, as much money possible.
There it is, folks. If you want to follow this dude, you give out tips and tricks on your social media?
Yeah.
At Joel Sandoval CPA. You also have another one, Sandoval Tax CPAs.
Yes.
That's your business one?
That's my business one. All my tax advice is on Sandoval Tax CPAs, and Joel Sandoval is more my lifestyle and kind of what I'm up to.
Right on. Joel Sandoval CPA for personal, Sandoval Tax CPAs for business and tips. He's got a new podcast he just started, Believe in the Entrepreneur. Go follow this dude. If you guys are in any kind of tax trouble, reach out to the guy. If you want to not get in tax trouble, reach out to the guy. And if you don't have the money to do so, just go to taxsaversacademy.com and learn for yourself.
100%.
Dude, appreciate you coming in, man.
Thanks for having me, Brad.
Folks. Oh, and also, if you guys are interested in finding out more about Joel, go to go.sandovaltax.com. Go.sandovaltax.com. The links will be in the bottom. And as always, keep it real.
Dropping bombs with the real Bradley. Subscribe now.